Hi guys, I hope you are all excited to start this case study. Before we dive into the model, let's understand that what is required out of us in this model. So you have a company overview here in this worksheet. Then you have certain category wise assumptions. All right, so let's understand the company first. So reading on the company overview section, Worldwide Sales Corporation is a family owned private company that was founded in 1975. Now, it has been given now. The company owns and operates a number of retail stores that sell general merchandise. Right? So the company owns what? The company owns and operates a number of retail outlets, retail stores that sell some general merchandise. Now, in 1994, this person became the CEO of the business and began the transition from a single store to multiple locations. So, the person basically expanded the company's operations. Then, all stores are owned by the company and there are no franchised stores. So, the company owns all the stores that are there. Now, you have been provided with 3 years of annual historical financial statements for the company. The most recent statement available to you is fiscal 2017. Now, your job is to build an integrated annual financial model for the company for the next 5 years by using the given historical data and the following assumptions. Assume all figures are in dollars unless otherwise stated. So you have some historical information. If you go to the next worksheet, you have 3 years of financial statements that are being provided. Right? Now, revenue assumptions. Now, it is being given to us that this WSC, this Worldwide Sales Corporation, this company will have 1095 stores as of the end of 2017. That means you are given the balance sheet for 2017, it's being provided as a historical number. So currently, the company has 1095 stores at the end of the year, which represents a total of 10.023 million square feet. The company plans on opening 50 stores in 2018, 45 stores in 2019, and 40 stores per year for the following 3 years. So the projections have been given to you here. You are being told now the company is going to operate, or the company is going to open 50 stores in 18, 45 in 19, and thereon after every year 40 stores for the remaining 3 years. The new stores will be a similar size on an average as the existing stores. Sales per square feet are expected to grow by 0.5% per year for the next 5 years, right? So now we are given the stores, how will it increase? We are also being told that sales per square foot is also growing by 0.5% for the next 5 years. All right. Now let's look at the costs. In 2017, 80% of the cost of sales were classified as variable cost and the remainder as fixed. Cost inflation is expected to be 2% per year for the next 5 years. Fair enough. SG&A, what does SG&A stands for? Selling, general and administrative expenses are expected to be $480 million in 2018, and then thereafter every year it will keep growing at the inflation rate. Now you might be wondering, where is that inflation rate? It is there in just the line above. Cost inflation is expected to be 2% per year for the next 5 years. Fair enough. So revenue assumptions we are given, cost assumptions we are given. Let's look at some capex and depreciation. Now the company will spend $150 million on capital expenditures in 2018 and 125 million per year thereafter. Right? So, what do we mean by capital expenditure? Basically, the company is purchasing the assets. So, what is the difference between capex and revenue expenditure? We'll do this when we reach the depreciation part. Okay, so don't worry. I'll keep on, clarifying certain accounting concepts as well. Okay, then it is given that the company uses a straight line method of depreciation. Okay, existing assets have a remaining useful life of 10 years, while the new assets will be depreciated over 20 years. So now the assets which are already there in the company, the assets which are already is coming in the balance sheet, they will be depreciated, or they have a remaining useful life of 10 years, whereas the new assets that the company will purchase, and where is that number? The capital expenditure, right? So the new assets will be depreciated over 20 years. Depreciation expense is included as a separate line on the income statement and is not included in the cost of sales or SG&A. That means depreciation you have to show as a separate line item, and it is not being shown as a part of cost of sales or SG&A. Intangible assets will remain flat and unamortized for the purposes of this model. That means for intangible assets that are there in the balance sheet, you do not have to amortize them. You just have to keep them constant. All right, so this is regarding capex and depreciation. Regarding the working capital, based on the historical data, you are being told that you need to make reasonable assumptions for the working capital days. Working capital days you need to compute over the next 5 years. Now, I hope you are well versed with these accounting ratios, right? Capital turnover, working capital turnover ratios, and to how do we compute the number in days. Okay, so for this model we'll be doing the ratios in days. Okay, so for every part of working capital, be it inventory, we compute inventory days. For receivables, we compute receivable days, right? So for same thing for all the components of working capital. So this is the assumption that you need to make. Okay, we will make income tax. Okay, the company's tax rate is 28%. Fair enough, we know what to do. But this is not it. Something else is also given here. It is expected that the company's pre tax income for government purposes will be $40 million lower than the pre tax income for accounting purposes every year in the forecast due to temporary timing differences. All right, so we need to keep that thing in mind. Now, what is it? How would be doing this thing? We will talk about this once we reach the income tax. This is basically, you might have heard about deferred taxes, right? So this is how we will compute it. We'll come to that. Regarding debt, the interest rate on the fixed rate term debt and revolving credit facility, or the revolver, is 3.1%. Now, there is a slight difference between fixed rate debt and revolving credit facility. We'll talk about this once we reach the debt section. Okay, just understand that these fixed rate debt and the revolving debt will have an interest rate of 3.1%. The variable rate debt, now this has an interest rate which is equal to your LIBOR, which is your London Interbank Exchange Rate, LIBOR plus 55 basis points, right? So, what is this variable rate debt? As you understand by the term variable, which means it is not fixed. So, this rate keeps on changing. Here in this model, you are being told that variable rate debt is equal to LIBOR plus 55 basis points. So LIBOR rate keeps fluctuating. So LIBOR plus 55 basis points, that means your variable rate will keep on fluctuating. Okay. Assume that LIBOR is 1.1% and will remain constant. Okay, so for this model, it is being told that LIBOR is 1.1%. So, what is our variable rate interest? LIBOR is 1.1% plus 0.55%, right? So, 55 basis points means 0.55%. Okay, Axis Cash earns interest income at a rate of 1%. So if you have any Axis Cash in your books in the bank, that will give you an interest income, right? So we will also factor that. Okay. Amortization on the fixed rate term debt will be $200 million per year until the debt is repaid. Amortization on variable rate term debt will be $30 million per year until the debt is repaid. So, amortization of debt means the repayment. So, you will be repaying $200 million of the fixed rate loan and $30 million of a variable term loan until this debt has been repaid. So, every year you will pay by this or repay this amount until the debt is repaid. Okay. The company will draw on its revolver if it has a cash shortfall. So just park this line. We will talk about this once we reach the debt assumptions. Okay. The revolver has a cash sweep such that whenever there is a revolver balance outstanding, all excess cash available after mandatory debt repayments, share issues, and dividends goes towards paying off the revolver. Just again, park this for a while, right? Otherwise, you'll get very much confused just in the beginning. Okay, I don't want that to happen. Okay, so this is our debt assumptions. Equity assumptions. The company plans to issue $50 million of preferred equity at the beginning of 2018 that will pay a dividend of 8.5%. So the preference shares are in the picture. The company is issuing preference shares in 2018 and is giving a dividend of 8.5%. The company's common dividend policy states that the common dividend will be based on a payout ratio of 20% of net income to common each year. So, whatever is the net income which is attributable to equity shareholders, 20% of that will be your dividend to equity holders. Now, you might be confused. Wasn't this 8.5? My dear friend, 8.5 was for preference shares, right? So that was preferred dividends for preference shares. Okay. This is what? This is 20% for equity shareholders. Fair enough. The company plans to spend $200 million on common share repurchases in 2018. That means the company is buying back from the market. This is nothing but your share buybacks. So the company plans to spend $200 million on share repurchases, buybacks in 2018 and $50 million per year thereafter. Fair enough. Assume that other assets, other liabilities, other shareholders' equity will remain constant over the forecast period. Okay, we will see to it. Now, what are the instructions? Using the spreadsheet that is being provided to you, build a financial model that forecasts the company's financial statements annually for the next 5 years. Fair enough. Create an assumptions page to enter your inputs. Please make sure the assumptions page is logical and well organized, all right? Build scenarios to run three cases: base case, best case, and worst case on a few of the assumptions that create the most variability on the company's earnings. Create schedules in the model for the key items that will appear on the financial statements. Fair enough. Summarize the key operating and financial results in the form of a dashboard. So we'll be working with a lot of charts and something known as spark lines, some visualizations we will be doing at the end. Okay, guys. So this was the model. This was the assumption. These are actually the assumptions which we will use to build the model further. All right. So the very first thing that you need to do, my dear friends, is create a new worksheet. Do this. Just create a new worksheet and we'll talk about what is to be done in a little while. Create this sheet, please. Now, I hope you know how do we create a worksheet, right? You just click on this plus icon and a new worksheet is created. Rename the worksheet, Alt HOR, rename the worksheet to assumptions. So I tried to keep the names as short as possible. So I write AS for assumptions, or you can also write inputs, INP for inputs. Okay, I hope you are with me. Now let's try and do something out of this plain worksheet, so that let's create a format which we can use in every other worksheet out there. All right, so go along with me. I'll go slow now. Select the first four columns A, B, C, and D. Please select the entire columns. How do you select the entire columns, guys? No touchpads, no using of mouse. Work with me with shortcuts. How do you select the entire column? Control spacebar. Press Control and spacebar together. Then press Shift and select the remaining three columns as well. Alright, I'll repeat it once more. Press Control spacebar, your A column gets highlighted. Press Shift and right arrow key to select the next three columns. Alright, now I hope you are with me. Reduce the column width to 1. Reduce the width. How do you reduce the width? How do you change the column width? Alt OCW. This will change your column width. Please change the column width. So you might be seeing me doing a little bit differently because I'm using Mac and not Windows. So some of the shortcuts do not work on Mac as it is, right? So if you're using Windows, it's Alt OCW. Press individually, first Alt, then O, then C, then W. As and when you press Alt OCW, you will be prompted to enter the column width. Enter 1 and press enter. So you will find the first four columns to be changing their widths. Fair enough. So I'll tell you why we are doing it. Just build something with me as of now. Okay. Now, increase the width of your E column. Increase the width of your E column. Same thing to be done. Alt OCW, enter, let's say 35 or 40. Just increase the width. Okay. F, G, and H, leave them as it is. Come to I column. Come to I column. And again, reduce the width to 1. Alt OCW and reduce the width to 1. Okay, fair enough. Now, highlight or select the first 5 rows. Select the first 5 rows. How do you select an entire row? Shift spacebar. How do you select an entire column? Control spacebar. All right. So press Shift spacebar and select an entire row. So for 5 rows, give it a dark color with a white font. Give it a dark color with a white font. Don't worry. Just follow me along. Just give me 5-7 more minutes and you will see something beautiful here. Select the rows, shift spacebar, 5 rows, give it any dark color with a white font. Okay, write the name of the company, Worldwide Sales Corporation. All right, Worldwide Sales Corporation, and give a worksheet name. What is this worksheet pertaining to? This is your input sheet. This is my input sheet. Okay. Do this. I'm just waiting. I'm giving you some time. Reach till this point, my dear friends. Okay. Now, next, E column, E3. Come to E3, cell number E3. Start date, end date, and actual or forecast. Just follow me along, guys. Don't worry. Follow me along. Start date, end date, actual or forecast. Okay. Now, the seventh row. Again, give it a good highlight. Same highlight which you've used above. Or if you want any other highlight, do it. Just keep the colors professional, okay? And write model assumptions. Model assumptions. Model assumptions. Now, model start date. Model start date. Okay, before that, in F5, in cell F5, write down constant, then units, and then total. Constant, units, and total. Don't worry, guys, follow along. I will explain you everything that I am writing here. Okay, just let's prepare something. Okay, start date. Now, whenever you are entering an input, you need it to be in a different color, right? You can give, let's say, a yellow color to this, or you can go in cell styles and select input, or you can select any color which you feel comfortable. Okay, so let's select this for inputs. Now, what is my model start date? What is the very first date that I need to start the model with? The very first historical year that I have. So, see, I have December 15 balance sheet available. So, what is the start date of this year? 1st January 15, right? So, here it would be 1st Jan 15. So, we will start the model with this date. Last balance sheet date, 31st December 17. 31st December 17. The last balance sheet was of December 17, remember? Number of projected years. I have to make it for 5 years, right? So I have to make it for 5 years. I have to make the projections for 5 years. Can you compute the model end date? So follow along, guys. I have a formula known as E date. So equals E date. This will result an exact date. So what is the start date? So from 31st December 17, I select this date. From 31st December 17, comma, How many months? So I need the projections for 5 years. 1 year is 12 months. So 5 into 12. Why am I hard coding? Because I don't feel a need to change this assumption. 1 year will have 12 months, right? Okay. So as soon as you press enter, what do you get? What do you get? You get a numeric. But what did we need? We needed a date. So can we convert this number to a date? Now I'll show you a magic. Ready for that? Okay. So on this numeric that you have just got, press Shift Control and 3 and tan, you get the date. Okay. Shift Control 3 to convert your number into a date. Okay. Now we have everything that we need to move forward. Come to cell J3. Connect the first start date here, 1st January 15. So connect this first start date. Connect the end date. Or let's compute the end date. Don't link the end date. Just link the start date. And just above this, write down number of months. Above this, write down number of months and enter 12. I'll tell you why. Don't worry. Just write down number of months and enter 12. Okay. Now, let's compute the end date. You have just done a formula to compute this end date. And what was the formula? E date. So start date will be what? 1st January 15. End date will be how many months? After 12 months. Okay. After 12 months. Don't forget to freeze 12 here. I don't want this 12 to change when I move forward. Close the bracket, press enter, change the format, Shift Control and 3. What do you get? You get 1st January 16. Why are you getting 1st January 16? Because the formula that you entered was E date, which gave you the exact date. But I don't need 1st January 16. I need what? I need 1 day prior to this, that is 31st December 15. So in the formula, if I just subtract 1 day, I should get 31st December 15, right? So in the formula, just subtract 1, E date and whatever is their computation, close the bracket and minus 1. All right, that gives me my 31st December 15. I'll give you some seconds, my dear friends. Reach till this point, please. Okay? Okay. Fair enough. Now, what is the start date of the next period? The start date for the next period will be what? My previous end date plus 1. The start date for the next period will be what? 1st January 16, which is nothing but 31st December 15 and plus 1 to it, plus 1 day to it, right? So I did what? I just come to the next start date, K column, equals previous year's end date plus 1. So it gives me 1st January 16. And then the formula for end date remains the same. And now I can easily copy it across to till 22. I need only 20 till 22. So just copy along. Done. Okay. Now, after 22, just press Shift, Control, and right arrow key together. It will select all the rows after that point. Shift, Control, and right arrow key. Now, I don't need all these cells to be visible or these columns to be visible to me. I want to hide them. How do you hide a column? Press Control 0. Press Control 0. So, two steps here. After December 22, come to the next cell and press Shift, Control, and right arrow key to select all the columns, to select all the cells after that, and press Control 0 to hide those selected columns. Right, so we are left with only till 22. Fair enough? Now, next thing, I need whether the year is actual or it is the forecasted numbers. So can I, how can I, how can I give this to Excel that please Excel tell me whether 31st December 15 are these my actual numbers or are these my forecasted numbers? So let's prepare a formula. I am going to use an if statement. If my end date, I'll select this 31st December 15. If my end date is less than or equal to, if my end date is less than or equal to 31st December 17 here, the last balance sheet date, and I will freeze this 31st December 17. So whenever you are linking something to this constant column, right, always do a column freeze on that. How do you do a column freeze? You press F4 thrice. 1, 2, and 3. Okay. Now, if my end date is less than or equal to 31st December 17, then is it an actual or is it a forecast? It is an actual. Otherwise, it is a forecast. As simple as it can get. And I will copy it to all the cells. Okay. So now you're seeing something beautiful here. Okay, reach till this point, my dear friends. Okay. Now, I will tell you why have I done this. So the first 4 columns A, B, C, and D, these are for my headings. These are for my headings. So just as you are seeing this heading model assumptions in A column, I will have, if I have to give another subheading, right? So let's say I am writing don't write, just look, revenue computation. Now it might have a subheading as to computation of selling price. It might have another subheading as to previous price or whatever, right? So now you understand the gist of it. So I am just indenting and showing my subheadings separately. Whatever I will be writing as a part of this model, that will be in E column. That will be in E column. The headings are for A, B, C, and D column. Okay. So we are done with A, B, C, and D column. E column, whatever I am going to write for this model, particulars, that will be in E column. Constant. So something which is not expected to change during the years. Something which is constant. For example, number of years 5. This is a constant value. Tax rate 30%. This is a constant value. that is not expected to change, right? So that is for my constant values. Units, now it is very and very important, my dear friends, that you keep your units, keep writing down your units. So this is date, again date, number of years, and date. So we will keep writing down the unit so that we know what is what. Otherwise, once, so this is just a small example. After you're done with the model, you have a lot of numbers out there, and you need to know something which is in millions, something which is in percentage. So you need that bifurcation to be done. All right. So that is the units column for you. Totals we'll talk about once we are done with the income statement. Now, I column, will do it. Just hold on to this I column as of now. From J to Q, you know the use, right? We'll be writing down the numbers for each year. Now, one more thing. As I move down, I don't want this to go up. I want my headers to be there. So I need to freeze panes. How do you freeze panes? With a shortcut, Alt W F F. So come to cell J6. Come to cell J6 and press Alt W F F. Alright, so you will see two lines coming. So now your headers are intact. Okay. Okay, please save your worksheet here, my dear friends. Please save it here. Now, I need to copy whatever have I done here. I need to copy it to a new worksheet, right? So just stick with me for a while. Before that, just remove the grid lines piece, Alt WVG. I don't need the grid lines. I don't like grid lines. So just remove the grid lines here. Now, how do you copy this worksheet and make a duplicate copy of this? So go to the worksheet down, go to the worksheet, click on the worksheet, press Ctrl and drag it ahead. Click on the worksheet, press Ctrl and just drag it ahead. So you will see this plus icon getting made, and once you drag it, you will have a new worksheet. And just write down template, TEMP for template. Create a new worksheet and write down template, and in the template you need to link the headers. You need to link these values 1st January 15 and so on from the input sheet. And once you're linking, just freeze it. Freeze it. And just drag it ahead. Do the same for end dates as well. I'll tell you why am I doing it in just a while. Do a row freeze and drag it ahead. Similarly, for actuals, now I have freezed it. Now I don't need this number of months here anymore, because I don't have to, I will never keep changing this 12 to let's say 6 monthly or 3 monthly during in the worksheets, right? If I have to change, I will do it in the input sheet. And since I have linked these value to the input sheets now, this is not based on these parameters anymore. So I can delete these rows. This becomes your template sheet. Now you might be wondering, okay, wait, I have seen a lot of financial models, but never have I seen a template sheet. What the hell is this? Just hold on for some time. We'll tell you what is it. All right. So template sheet. Okay. Just keep this sheet as it is. Now, okay, I'll tell you here only. Why are we creating this template sheet? because I will be making a number of worksheets now: income statement, balance sheet, cash flow, fixed asset, debt, equity, working capital, right? So I don't expect myself to keep doing this kind of a formatting on every worksheet, right? So what I am going to do is I will simply copy a template sheet, copy this template sheet, change the name, and start working on that worksheet. So that will ensure that all of my worksheets are looking alike. So my model will be well formatted model and a consistent model. All right. So now come back to the input sheets, please. Come back to the input sheet. Now I have another category here. Let's make revenue assumptions. Let's start with revenue assumptions. Okay, so I have been told that there are some number of stores in 2017 that has been provided to me as an input. And what is that? 1095. So as an input, 1095 stores. Okay. Guys, one more thing, keep the formattings consistent everywhere. If you are showing the numbers in one decimal throughout the model, it needs to be in one decimal only. If you are showing without the decimals, then throughout the model it should be without any decimals. So you need to be very very careful with the formatting, with the formattings of the numbers. All right. Now, number of stores in 2017, it's done. What else? Area. Total area of stores in 2017. Again, that has been provided to us, and that number is 10.023 million. So 10,023 triple zero. 10,023 triple zero. Sometimes you might notice these hash, that means it's not coming within the width of the cell. So press alt oca to adjust the width. Okay. Okay, moving on. I have to create some scenarios, right? Now it is being given to us that the company plans on operating 50 stores in 2018, 45 in 19, and 40 in coming years along. Now, what if the conditions are so favorable that the company exceeds these stores? That means the company opens up more stores that is being provided to us. Or what if the conditions are unfavorable for the company and the company doesn't, you know, the company is not able to operate in a normal manner and the company doesn't reach these assumptions? That should be the worst case scenario. So now we will see how do we actually build scenarios. All right. So pick up the template sheet. You know the drill now. Pick this template sheet, create a new sheet, and bring it after the input sheet. Okay. Place it after the input sheet. So just click on that sheet and drag it where you want to place it. Just put it after the input sheet and name it scenarios. Above in the second row, change the worksheet name. This is scenario. Now, what are the three kinds of scenarios that you can have? Best case, base case, and worst case. You can have these three scenarios. I don't need them to be highlighted, so I can just do a no fill and a black font. Okay. Now, I hope you are with me. If not, please pause the video and complete till this point, guys. Now, model option. What is the option that I'm going to select? I need to create a drop down menu. I need to create a drop down with these three: best case, base case, and worst case. How do I create a drop down list? It's very simple. Go to data tab, go to data validation, click to allow list, and in the source select these three: best case, base case, and worst case, and press enter. So as soon as you press enter, you will see these options in the drop down. Okay, reach till this point. I'm waiting for you, it's all right. Reach till this point. Done. Okay, now just in a cell besides this highlighted cell, I want to know that within this range, within this selected range, what is the position of the case that I am going to select. So, for example, I have selected best case. So, what is the position? It is the first position. First, if I select base case, then I need 2 because it is the second position. And if I select worst case, I need a 3. All right. So tag along is equal to match, which is the function that returns the value, the placement of within the range. It is the match. So is equal to match lookup value. I need to look up this. Lookup value is whatever I select. Lookup array within the range this. So match this within this range, and if it is there, it should tell me on what position it is in. So is equal to 0 for exact match, and that's it. So it tells you that base case is at number 2. If I select best case, it will give me 1. If I select worst case, it will give me 3. So let's select the base case and we are done. All right. So best case, base case, and worst case. Now you have created a scenario switch. Again, I need some bifurcations, and this will give me model scenarios. Now first scenario I will be building for number of stores. Now see the usage of A, B, C, and D column. I have to give a subheading. My main heading is model scenarios, then subheading to it, number of stores. Now I need for best case, base case, and worst case. And the units will be in numbers. Okay. Now since I need to start my inputs from 2018, right, from the forecasted years, I don't want anybody to touch these years, the actual years. So let me just gray it out so that people don't write anything on this. They know that this is grayed out. That means it's not accessible. Okay. And I start making my inputs from forecasted year onwards. Now, whenever an input is being provided to you in the model, that means they are giving you the base case scenario. So what was the base case scenario? 50 stores in 2018, then 45, and then 40. So 50, 45, and then for the remaining 3 years it is 40. Okay, consistent with the numbers. If I am showing in 1 decimal, I'll show in 1 decimals. Now if the situations are favorable, let's say the company can open up 10 more stores if the situations are favorable. So let's make it 60, let's add 10, and in worst case let's subtract 10. Now this is very subjective, guys. If you want to make any of your assumptions, you can, right? If you want to say, okay, 10 stores is too high, let's say 5 more stores is reasonable as worst case, as best case. And then worst case, let's say the company doesn't get to reach to even 40. If you want to do it below that also, you can. It is your research, your assumptions, and what you think of the market. So let's, for this model, do it like this. Okay, then draw up a borderline and number of stores. Now what is the selected number? What is the selected number? Now selected number is very easy. How do I do it? Let's apply a formula and let's make it consistent. Okay, now what I need is, now this is the area which I am going to link to my computations, right? So if I select best case, this should change to the best case number. If I select base case, there should be a base case number here, and so on, right? So I have a formula known as choose. So is equal to choose based on this index number, this number 1, 2, and 3, the position that you have said, the position that you have highlighted here, the match function area, right? And just freeze it based on this number. What is the first value that I need? So remember, the choose function works in a chronological order. So if it is 1, then what value? When will it be 1? When it is a best case scenario. So if it is 1, I need this. If it is 2, I need the base case. If it is 3, I need the worst case. And just drag it across. And you will observe a magic here. This function gives you the values in the base case. Now if I change to worst case, you will see the values getting changed. And if you see the best case, you will see the values getting changed. Okay? Fair enough. Now I hope you are done with this thing. Come back to the input sheet, and now number of stores, number of stores, remember to write the units always. And what you're gonna do is, you are going to link this to your scenarios. Link this in the numbers to your scenarios. And what area, the area that you do not need, should be grayed out. Okay, so you're done with number of stores. Okay, now just write down number of additional stores. These are not total stores, these are my additions. Let's make it number of additional stores everywhere. Number of additional stores. Here also, number of additional stores. Okay. Now again, next is sales per square feet is expected to grow by 0.5% per year for the next 5 years. In scenarios, let's make a scenario for this also, that if it doesn't grow by 0.5%, so sales per square feet, again I am just bringing this computation down. So how do I do it? Copy the entire row. How do I do it? Shift spacebar, select the entire row, select all these 4 rows, do a Control C, select the row where you want it to get placed and do a Control V. So it copies the exact same thing along with the formula. So now the base case was 0.5%. Let me just delete the numbers. Base case was 0.5% and throughout it was 0.5. Okay. Let's say the best case scenario could be what? That sales per square feet increase by, let's say, 1%. Again, this is very subjective. You can change your assumptions. Or worst case could be it is only 0.2%, let's say. So your formulas should also be in percentages, and if you're showing up to 1 decimals, you need to show everywhere up to 1 decimals. Again, sales per square feet, as a percentage. Now again, you're going to link it to the respective percentage. Okay, so you have all the information now to create a revenue schedule. All right, so in the next video we'll start to create a revenue schedule, and we'll create a revenue and a cost schedule in the next video. So I hope you are with me till this point. I hope you are absolutely clear till this point. That's it for this video, guys. I look forward to welcoming you in the next video, where we'll start the actual computations to this model and start to create the revenue out of the assumptions. See you in the next video, guys.